Good evening, everyone. Welcome to the channel. Today I am going to talk about Midea Group interim report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Midea Group Co. Limited offers a diverse range of businesses and services across various sectors. The company's primary offerings include home appliances, air conditioners, heating and ventilation systems, kitchen appliances, refrigerators, washing machines, small appliances, robotic and automation systems, industrial robotics, automatic logistics systems, transmission systems for future factory-related fields, building solutions, smart supply chain solutions, Internet of Things, IoT solutions for intelligent appliances, financial services, customer deposit, interbank lending and borrowing, consumption credit, buyer's credit, finance leasing services core components, compressors, motors, chips, valves, reducers, auto parts, motion control and automation, high and low voltage variable frequency drive, energy storage and cooling modules, medical imaging products. These businesses and services cater to various industries, including healthcare, entertainment, new consumption, and smart supply chain solutions. The Midea Group stock price has remained relatively stable over the past year, experiencing only a -3.66% fluctuation. This stability can be attributed to several factors. On one hand, the company's strong financial performance, including record-breaking annual results and double-digit revenue growth, has maintained investor confidence. Additionally, strategic initiatives such as listing its H shares on the Hong Kong Stock Exchange and expanding its international sales network have also contributed to this stability. However, despite these positive developments, certain factors have likely prevented a significant upward surge in the stock price. The company's underperformance compared to the broader market, challenges within the robotics and automation segment, and projected dips in EBITDA margin have tempered market enthusiasm. Furthermore, broader economic concerns such as geopolitical tensions, tariff risks, and uncertainty in 2026 due to a high comparison base may also have contributed to this stability. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, the investment in research and development, R&D, has led to the development of innovative products, digital business model innovation, and data-driven business processes. This has enabled the company to expand its product offerings and reach new markets. Additionally, the company's overseas expansion strategy has driven revenue growth from international markets. Strategic entries into new regions and optimization of global supply chain systems have contributed significantly to this growth. Furthermore, the integration of acquired entities' resources, product innovation through new solution launches, and market reach expansion in intelligent building technology have also contributed to revenue growth. On the other hand, potential risks and challenges that could impact revenue growth include competitive pressures, changes in industry trends, trade frictions, tariff barriers, and export uncertainties due to deglobalization and trade protectionism. Net income and profit margins. A shift in favor of growth, the financial performance of the company has shown a significant improvement in net income and profit margins over the past year. Net income increased by 25% year-on-year, with an even more substantial growth of over 30% in the first half of 2025. The net income also rose from RMB 21.1 billion to RMB 26.6 billion, representing a year-on-year growth of 26%. Profit margins have also shown improvement due to various factors such as refining presence in overseas markets, enhancing full value chain profitability, and increased R&D investment. However, there was a slight decrease of 0.6% in profit margin due to the slowdown in product upgrades and decline in industry's average selling price. Despite this, the overall trend indicates an improvement in profit margins, rising from 9.7% to 10.6%. The company is generating positive operating cash flow, with a significant increase in net cash generated from operating activities. In 2025, the company reported RMB 37,281 million in net cash generated from operating activities, up from RMB 33,488,170 in 2024. This indicates that the company's operations are producing sufficient cash to cover its expenses and generate profits. The company's debt level and interest expenses have undergone significant changes. The total borrowings increased by 11.4% from RMB 83.3 billion to RMB 93.1 billion, with a notable increase in current borrowings from RMB 69.5 billion to to RM 80.8 billion. However, non-current borrowings decreased slightly from RM 13.8 billion to RM 12.2 billion. In terms of interest expenses, there is a marginal increase of RM 6972 in interest paid, from RM 805,920 to RM 811,892. Finance costs net also increased by RM 323,077, from RM 168,792 to RM 491,869. Interest expense rose from RM 74.5 million to RM 79.1 million. Overall, the company's debt level has increased, while interest expenses have seen a slight increase, indicating a moderate rise in financial obligations. The company's financial summary reveals a mixed performance across various regions and segments. Notably, overseas operations, domestic markets, and Europe demonstrated strong performance. Within specific segments, e-commerce, HVAC, smart elevator, building automation, smart home solutions, energy solutions, and industrial technology, and intelligent building technology showed significant growth. However, the segment of robotics and automation reported a moderate year-on-year growth of 8.3%. Interestingly, no regions or segments were explicitly mentioned as underperforming in the summary provided. Management is optimistic about the company's outlook and strategy. Key highlights include significant potential for future expansion due to growing demand for industrial robots, 4% annual compound growth rate between 2025-2027. Focus on charging for new energy vehicles, expanding intelligent building solutions, and increasing market share in HVAC, elevator, and building automation industries. Plans to expand overseas smart home markets, enhance user experience through AIoT technology, and strengthen proprietary brand development. Investment in R&D of chip products and technologies, with over 32 invention patents and leading market share in various product categories. Management is prioritizing collaborations with key accounts, focusing on technological innovations and business model upgrades. The company aims to transform from a China-based company to a global one, driving balanced development of to consumer to C and to business to B businesses. Midea's financial summary reveals dividend payments and share buybacks. A review of Midea's financial summary reveals that the company has a history of paying dividends to its shareholders. The document confirms multiple instances of dividend payments, with amounts exceeding RM 134 billion. This indicates a commitment to returning value to investors through regular dividend distributions. In addition to dividend payments, Midea has also engaged in share buybacks. The company has repurchased shares totaling over RM 29.6 billion and canceled 11 million shares. These actions demonstrate the company's efforts to manage its capital structure and potentially boost shareholder value through strategic share repurchases. Concerns about inventory buildup and supply chain disruption. The financial summary highlights concerns regarding inventory buildup, indicating a potential issue in the company's supply chain management. The presence of yes on page 77 further emphasizes this concern. Additionally, data from pages 78 and 146 reveal mixed trends in inventory levels. While finished goods inventory increased by 14.3% between December 2024 and June 2025, raw materials inventory decreased by 9.2%. These discrepancies suggest that the company may be experiencing difficulties in managing its inventory effectively, which could lead to supply chain disruptions if not addressed promptly. That concludes the financial summary for Midea Group. Feel free to comment below, and I will be happy to answer them when possible.